Hi guys, in this video I'm going to try to explain what's probably going on with SMCI, and this is basically piecing together what the Hinton report wrote in August 27th, which is about two months ago. So today's November 2nd, and kind of from what they observed and how SuperMicro is reacting. This is what I believe. You think this is a conspiracy theory. This is what I believe is really going on. And keep in mind, this is not financial advice. Do not use this to decide whether you want to play the stock next week. So next week is November 6th. Next week, November 6th, is the SMCI earnings. And do not use this, my explanation, as a way to decide whether you want to sell or buy the stock. This is not financial advice. But hopefully it will give you insight on what SMCI side is thinking and what's actually going on. Okay. So now if you guys recall, that Hinton report said a lot of interesting things, and SMCI is reacting in a way that's, it doesn't make sense. It's like, why don't you guys freaking come out and freaking just release the 10K report, right? But actually I think this is what's going on. This is why they're behaving this way. They're not, a lot of people are saying, hey, they should just come out and just, like whether apologize or say, no, we're gonna, but this is actually why they're probably not doing it. So this is just my theory, right? So first of all, what was the goal? This is what I think has been happening, right? So 2018, they got into trouble and they got delisted, wherever that kind of stuff happened. And now, what is the thing that Charles Lang wanted for SMCI? Starting around, like the 2023, I guess, when AI started getting really, really high, right? So what did he actually want to happen? Did he want the stock to go up, or what he actually wanted to do, the plan all along, was he wanted SMCI to get a whole bunch of cash. That's what he wanted. That was his main goal along. Because he needs cash from outside investors just to pump into SMCI. That way he can take the cash and do a lot of useful things with it, whether it's to buy more servers or buy more of this resource to make the servers or whatever. So he needs the cash. That's the main goal. That's the way you should think of this. And what's the best way that he could get this cash? So he got up with the idea is that what I'm going to do is come up with a clever way to pump up the stock of SMCI, take advantage. And how do they pump up the stock? Well, because exactly around this time I noticed that this AI thing is going to be really hyped up, right? It's going to be really hyped. So I'm going to take advantage of that, pump it up, the stock. Because if I can pump up the stock, then what could happen next is I will, once it gets really high, whether it's 500, 600, 700, 800, it doesn't matter, but make it really high, super high. And once it's high enough, I'm going to then get the cash by selling convertible bonds. Okay? I'm going to sell convertible bonds when it goes super high, like $700, right? So I think the actual price was around 800 or 700. That was it. Once I get that cash, then pretty much mission accomplished. Okay, so now let's think about this. So how does he pump up the stock, right? And by the way, why does he want to do convertible notes, right? Because usually if you do convertible notes, so convertible notes are those that are, they pay, the advantage, okay, so the reason why people would buy a convertible note from SMCI or whatever, these corporate bonds, is that, say if they have this deal where if the price goes up a certain, goes really high because the company's doing great, or everybody's really happy, the price going high, and so I think this case is about like 1,034 or whatever the dollars is. If SuperMicro hit that price, then okay, so come on, this is before the stock split, so it would be equivalent to like $103 right now, post stock split. So the idea was if it exceeded this thing, it'll automatically become a share. By the time that's everybody's happy, because man, that means SMCI is doing great, and plus they got the stock they got converted stock plus all the previous bond, monthly. I don't know if it's monthly, but whatever, they get the bond monthly payments, right? So that's a good deal. Everybody wins that situation. But Charles Lang was like, so that's why he's smart. Is like, because he knew that once he got the cash, the stock's going to be high. But his goal is not to make the stock higher and higher and higher. He just wanted the freaking cash. Because the bottom line is, if he makes the stock really, really high, which is great, it's not like he can sell his stock without inside, like the insider trading. So he wanted like that. All he wants is just get it high, where it is, and what's going to happen next? He kind of knew that it was going to fall back down. Other people didn't know, but he kind of knew that it was going to fall back down, and it will explain why. But he was okay with that. He just wanted the freaking cash, because once he has the cash, SuperMicro can do so many. It opens up a lot of doors for SuperMicro, right? They can decide to build this, build that, or expand, or whatever they can do with that, right? So all this stuff, and why this whole mess is happening, and why Hindenburg's noticing all this weird stuff happening, is likely because of this. Okay, so now the next question is, how does he do it? How does he pump up the stock? Whether it's temporarily or forever, how does he pump it up, right? So the key way he does that is, what do most investors, when they look at SuperMicro's earnings or Dell's earnings, what is the number one thing they care about usually in their earnings report? It's the margins. That's the thing they first focus on. In other words, they sell this server at this price, make this much money, but then the cost of making the server or whatever is this price. So that difference, that margin, is what they care about most. And yes, there's they do care about other stuff, like how much money they had to spend on the leasing an office, all kind of stuff. But it's kind of like Charles was smart enough that they probably won't notice that as much. And so what he did next is all these these things that Hindenburg noticed, to get the margin to look pretty good, and kind of hide the cost in other areas of the balance sheet to get the stock to pump. Because a lot of people are going to like, okay, that other stuff, we can kind of understand it, yeah, because you can make up a lot of excuses to hide the others, the other costs increasing. And so, but and if you can make them, by doing so and making their margins look really beautiful, their stock's going to pump, right? Because a lot of people might not notice the actual hidden costs that you're actually doing in your balance sheet. Okay, so now so the key was how to get the stock to pump up and therefore get your convertible notes sold. You got to get the margins to increase high. So now, how do you get the margins to increase high? Because nobody's dumb right here, right? Like, oh, we're not going to sell SuperMicro these parts, the servers that they need. We're not going to sell them for cheap prices, right? So, okay, so his brilliant plan was, okay, instead, I'm going to find the people I trust and their companies, so which are the brothers, the guy who did the CompuWare, and the guy who did the what was the other company's name? Okay, so right here's the Hindenburg report. Okay, this one, yeah, Abelcom. Okay, so anyways. So what he does is, because those are owned by his brothers, right? So you guys already read the Hindenburg report, so you guys know that. So what he told those guys is, okay, this is what we're going to do, is we're going to have you guys, so what's going to happen is that these PC parts for these servers, we're going to make them really cheap for my SuperMicro. In other words, initially, right? I don't know when they started doing this, but let's say it's 2020, 2020 21 or I don't know 222 whatever. What they do is they, in order to make the margins look attractive, they have these third party, these outside, these brother companies. They'll sell these parts to SuperMicro on the beginning for very, very cheap, or maybe even at a loss, whatever, very cheap. But the thing is that keep in mind that these companies are private companies, so they're no one can really audit them from outside and confirm that, oh shoot, you're selling these things way freaking cheap, or maybe even at a loss to SuperMicro. So that, that's how he solves that problem. Now, because the SuperMicro could get these margins, could get these products, like let's say it's the fan, I don't know, it could, like the chassis, the fan, whatever. These parts are really cheap, sold, and these costs and these losses, so to speak, are hidden on these brother companies initially. So they're hidden on these brother companies, and then so what Charles and them schemed up likely is he says, hey, what we're going to do to get the SuperMicro stock to pump up and get that free cash, you companies are going to have to hold the losses temporarily. Once I get the convertible bond cash, I'm going to do another creative technique to get you guys some of that money back and to undo your losses. But it's going to be a gradual process. I'm going to explain that. So again, the initial way that they do this is the parts that Ablecom and Copyware do, sell them to a very, very cheap price, very cheap, and maybe even at a loss. But that makes the margins look great. Okay. Now, also and also another way they kind of hide these losses. They kind of donate the losses from SuperMicro to other companies. They can even do things like, I think this kind of mentioned in the Hippo report, is they kind of offloaded some of the work. Like, I think they had a demo SuperMicro. Was it? Yeah, I think they demoed some of the parts, or some of the like the liquid cooling, whatever. They use like Ablecom or Compy, whatever. So one of those companies to they use their product to demo it and stuff like that. So that kind of hints that, yeah, they're moving the cost to those other guys. But probably to hide that, to make the SuperMicro losses not so, the cost, I guess, not so high, and therefore to pump up the stock. Okay, so now how does SuperMicro pay these guys back? So this is where the problem came. Is okay, first they got the convertible, they got the huge amount of cash from the convertible bond sale, right? Oh, by the way, not only was it convertible bond, but also one point, I think even before that, they even diluted the shares, and they even got more cash because of that. So remember, they got the diluted shares cash, so they got that, and plus the bond, the convertible note bond. So plus that together, they have all this cash. Now, how the freak do they pay his brothers back, to undo their losses? They were going to say, okay, so initially you charge us super cheap prices for these piece parts, but now once I get the money, you can start charging me higher and higher and higher, and overcharging me, and hopefully the investors won't notice. So that's what they did. Okay, so that was the trick they did, and see what happened is, like one earning report ago, that's why they were like, but then the problem is they couldn't hold this for too long, and because I think the brothers companies are really struggling with, because they had, they're holding losses for, I think they're probably borrowing money or something like that. Because of like that, they had to, and they the problem is the situation is getting a little bit more getting out of hand. So that's why you'll notice, I think, in that previous earnings report, that SMCI was, for some reason, like, huh? They had to pay this much for this piece of product, and then SMCI, it's because of the supply was limited. The supply for that one piece that I guess needed liquid cooling was limited. and so that's why they're like, oh, why? Because I think that the thing was, the comment was, why did this one piece get, seemingly overcharged, and actually the real reason isn't probably because of the supply was limited. It was because they had to pay back his brothers for those losses from previously, like that, using that bond, the cash from the convertible notes plus this stock dilution that was done earlier. Okay, and also other techniques that he, or I guess SuperMicro does to help out, the fact that his brothers are losing money, to help pay them back, is he also had if you see here, the two the buildings that I think SuperMicro leased out, and then what happens, Ablecom, CompuWare, they occupy that space, and then SuperMicro will charge them like a cheap lease, or like a lease that's probably like sublease it for super cheap price. So that's what I think is happening. So that's going to help Ablecom and CompuWare not have to pay so much take so much hits. And now you might say, well, then, but doesn't that make the stock go down? So yeah, it's true. So what happened is, because they had a because they have these things, yeah. But like I said, it could be hidden in like people won't notice it as much, right? So even though the fact that they're not getting a lot of pay from Ablecom or CompuWare for leasing these offices, in order, they're not getting a lot of money from that thing, but they can just hide it in the balance sheet. They just say, oh, this is like the office lease thing. And honestly, people who study the earnings of SuperMicro, do they check that? I mean, they might look like it and they say, oh, it's because the stock is way high. I mean, you can disguise this, right? The stock is way high, therefore they need more space, therefore the leasing costs increase. So you would reasonably, as an investor, think you can brush that off, thinking that's fine because this company's only growing bigger. Of course they need more office space, right? But it actually turned out it's because they're undercharging his brothers to use that space. Okay. And let me see what else. Okay, so the other thing is, the other thing that Hindenburg reported about was remember they had this startup. Okay, there is a startup called Lambda Labs in California, right? And so how this thing was, it was kind of odd. And this is what like happened. Again, this is another brilliant margin play, right? To increase the margin, is SuperMicro will spend billions of dollars in AI startups. And okay, so this one was Lambda Labs, and what Lambda Labs does, I think they're like an AI cloud service provider or something like that. Now the trick here is, and this is why it was kind of brilliant, is SuperMicro will send billions to the AI cloud startup, which is kind of puzzling. I mean, it's like, okay, interesting, but this is what actually happened. Yeah, this did happen, but the deal was, as part of this investment deal, Lambda Labs, the startup, can only use SuperMicro computer servers. They can only buy from them, and this is the most important part, they gotta buy at maximum price. No discount, nothing. So what happened here is the margin per server increases because these startups are having to buy at these high margins. And then yes, they have to admit in the balance sheet that they had to pay, the billions or whatever in investment into these startup companies. So in the investment part of the balance sheet, it'll be increasing. But guess what? They can, why is it easy to overlook? Because investors look at that, oh, you started to invest in startups? That's so cute. I support that. Because AI is the next big thing. That makes sense. And then you overlook it. And they overlook it, right? So that's what happens. Is SuperMicro just they rely on people overlooking that fact that they're just trying to increase the margin. They're trying to do whatever trick they can to increase the margin and do things that look innocently, but they're not so innocent, right? Because do they really want to freaking invest in a cloud company? Do they really want to? I don't think so. I mean, like, is it in their best interest? Not. It's weird, so random. but they disguise it as, oh, because AI is so hot and we're, in fact, this is, it makes SuperMicro look brilliant. It's like, plus we're expanding. Hey, maybe we might not just do hardware in the future. Right? We might be doing cloud stuff. Blah 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 blah. Right? Okay, so now the next question is, okay. So anyways, I think I'm done talking about how they did the margin trick. So that's how they did it, and which pumps up the stock like that. Okay, so the next question is Ernst & Young. So what were they likely spooked about? So this part I don't know, because they said that, they did, SMCI was unethical, blah, 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 blah. So only thing that I think what Ernst Young's, I'm just guessing, right? What Ernst & Young likely got spooked about is probably they started wondering why when they were reading the sheets. And by the way, you remember, because Charles Lang is working with his brothers, all those numbers are correct. I mean, like, for the most part, right? All those, the margin values, whatever, and that's why they can say that, hey, we don't expect, that previous year, the 10K thing, we don't expect those numbers to change meaningfully, and they're correct. It's because, they're co-working with those brothers, right? But anyway, so what was likely Ernst & Young spooked about? I'm thinking what happens is that they were wondering why the margins charged by the brother companies were so huge. So keep in mind, is remember in the Hindenburg report, they were saying, because Hindenburg report came later, right? Hindenburg report is in 2000, is this year, 2024. When Hindenburg started researching, I guess this part is, they got into the phase where so remember the beginning starts with they're undercharging, the brother companies are undercharging, and then they 2023 hits, they start overcharging. Hindenburg came in on the overcharging phase, and so what they noticed that, hey, they're overcharging, and then what Ernst & Young was like, man, yeah, when Ernst & Young started looking at Hindenburg report, they were saying, why SuperMicro are you guys allowing Abelcom and CompuWare to overcharge? And then later Ernst & Young, when they thought about it, they probably came to the same conclusion that I did, which is crap. They were just doing this game of making the margins huge on previous quarters, just to pump up the stock, but then they got to pay those brothers somehow in doing the overflating trick, like I just said earlier. So that's probably what happened. Is that Ernst & Young found out the truth, and also, I would not be surprised if Ernst & Young also found out about the startup company trick, right? Have the startup company agree to only buy your service at maximum price to make the margins look great, and then we'll pay the $2 billion, which looks like an honest, innocent, cute little, doodly da thing, right? It looks so innocent and cute, and looks so right. It's like, SuperMicro is becoming what's the term? They're becoming a benefactor, not a benefactor. Forgot what the term is when people start. They're becoming patrons, right? Patrons of the AI art, whatever crap that is. All right. So, anyways, okay, done ranting on that. Okay, so next question is, what will likely happen? So this next Tuesday, right? Today is Saturday, Sunday. So Tuesday, what's likely to happen on the earnings? What do I think SMCI is going to say? So remember, November 16th, which is 2 weeks later, I think, and everybody thinks is that if SMCI doesn't do anything, they don't comply with the regulations, they'll probably get delisted on November 16th, right? So that's pretty scary, right? And like last time in 2008, they got delisted, moved into the, so if you guys seen this video, right, they got moved into the, so this is 2018 when they got delisted, right? And the reason why they got delisted that time, actually I don't know the reason, because I think the situation where they, anyways, it was some accounting issues, whatever. Anyways, they got delisted, and it was crazy. That time, they started out as $40, and they jumped down to $13. So that's about, like, let's say that's about like a 75% drop, right? And then they played on I think they were stuck for a year. They were inside the pink sheets, trading, and then finally when they got, over a year later, when they got relisted back, they started trading normally and started making more money. So the good news is, so that was a 75% drop on their all-time high. If history repeats itself, maybe we're okay. By the way, guys, this is just financial. not financial advice. This is absolutely not financial advice. But if you're playing the mirroring game, like, okay, what happened this time? It's going to be a repeat of last time. We've already just, because our recent top is like 1200, and we dropped all the way down to 26, 25. So we've already had the 70%, 75% drop, roughly. So if this were to be true, then that would mean, if history repeats itself, the stock may not go down that much more. This may be bought. Now, we may be delisted. I mean, SMCI may be delisted, and then trade around this price, and then get relisted. 1 year later, get relisted back to Nasdaq, and boom, it goes back up to normal. So that might happen. And back to normal, I mean, maybe it'll come back out to the 50s, 60s, and gradually go back to 100, okay, stuff like that. But that's where, not financial advice, that's what we don't know will happen. Because, so think about this. What are they likely to say in this Tuesday earnings? So first of all, one kind of hint is they didn't come out and say, we need more time to figure out, we need more time to come up, with an earnings report. We're going to delay till 2 weeks later or whatever. No, they went on time and said, November 6th, that's the date. So what I expect they're going to do is they're going to come out strong again and then reiterate the same thing they said last time, which is the previous year's report. The previous year's report is the numbers, no major revision. And they're going to be adamant about that. And the reason why they're going to say that is that they think that when they say that, everybody's going to believe them, and the stock probably going to shoot up. And then everybody's happy. But the problem is, if people don't believe them, if they say this thing and people are like, this is the second time, because shame on me, shame on you, whatever that game, right? If they don't believe them, oh man, the stock can actually freaking go down even more. It can freaking go down even more. Because, it could be like, and think about this is, if they don't believe them, what can happen also is, and the reason why the stock can go down more, fundamentally, is because maybe the customers that were using SuperMicro, you know what, we don't want to trust a scandalous company. We're going to buy Dell. We're going to buy HPE and do those guys. So that could be the problem. And then the stock's not going to mirror history. It's going to freaking just go down. Now, also another thing I think they might say, as this might be also kind of their bold move, is they might come out and just say, hey, by the way, we're not going to make that November 16th deadline. We will be dislisted, but we're going to fight really, really hard to show them that, hey, our numbers are, for the previous year are definitely correct. We're going to fight really, once we have the new auditor, we're going to fight really, really hard and prove that, we're good, but we'll still be delisted. So, right, that can even happen. So if that happens, I don't know, does the stock will go down? But if they felt like, again, it's just, do people believe that they're, because, if you say, hey, I'm fighting, I believe my numbers are correct, Ernst & Young is not correct, or whatever, then maybe some people will be like, maybe the investor will be like, oh, they really believe they're right, I trust them. So it's all about trust, right? So it's just, do people trust what they say? Stock's going to explode. And by the way, if it goes up, oh my God, the short squeeze I wouldn't be surprised if it pumps it up to 50. It could really pump it up to 50. Now, that being said, like I said, if they don't believe them, it could go down significantly more. The video here said that the target, the next level is 22, and then if that breaks, it could go to 10. Okay, so whatever. But so that's why I'm saying this is one of those things where you just don't know. I mean, you can know this conspiracy theory that I'm presenting you today, but you just do not know. Is it going to go up? Is it going to go down? So you're going to be in a tough pickle if you already own shares of SuperMicro. Now, yeah, and this is kind of my feelings. I feel like investors are really kind of smart these days. So I really don't know if they come. Okay, so the best case scenario, I think, if they have this earnings, is they come out and say, we stick to our numbers in the previous year, and we found, and by the way, we have a new, let's say the best case scenario is they stick to the numbers, and they did find another auditor, and the auditor agrees with them, and they say, hey, we're going to be compliant with, and plus we're going to release the 10K in time, whatever. The stock's going to shoot up. The stock's definitely going to shoot up. Now, if they have the new auditor, but they're going to say, hey, we're going to be, I guess if they're 10K, it's not going to, they're still working on their 10K, then the stock might, the stock might tank. The stock might tank. Now, what might make the stock go to zero? Because a lot of times in the forums, I see a lot of people saying what might make the stock go to zero. So what might make stock go to zero is what I said earlier. If people are like, what, maybe the earnings report, they come out and say, hey, we're still disagreeing with Ernst & Young, and maybe we can't find whatever. And companies that use Dell, the SuperMicro, whatever, they might say, hey, I don't trust SuperMicro because maybe they are corrupt. I'm going to switch to Dell. Yeah, that could cause SuperMicro to go bankrupt. So you got to be careful there. And also, if somehow those the convertible bond situation, if those guys, I don't know if this is even possible, if the law allows it, but if they somehow freaking threatened SuperMicro and somehow undid and got their cash back, I think SuperMicro can also go bankrupt because they really need that cash. They really need that cash. Okay, so now, one question you guys might have is why SuperMicro even needs. Do they really need? I guess. Do they really need the cash? So the answer is yes, because they needed that cash to pump up. Yeah, so they needed to get the margin. Okay, so first of all, they need to get the margins high, pump up the stock. They get that cash, and they can start investing and building those things. So remember, Dell. Okay, so when I looked at the cost of the server, say a Dell server cost $50,000, SuperMicro servers will cost $40,000 for, I guess, like maybe the equivalent, and that is the reason why people will buy SuperMicro over Dell, is because of that cheapness. Now, if they were the same price, obviously people are just going to buy the Dell, because Dell tends to be thought of as a premium kind of brand. But if they're same or even close, the people will buy Dell. So that's why it's really important that SuperMicro have those really wide margins, so that the price can go down and people will buy SMCI, the SuperMicro servers, and the SuperMicro server market share will maintain its huge leadership. But what's happening now is because the brother companies are having to overcharge those pieces, those margins are tightening, and that's why they're running into that problem. Okay, so again, in conclusion, Charles, he just wanted the cash for SuperMicro. He didn't care about the stock price because he knew that once he pumped it up, it's going to fall back down anyways, right? Because when people are going to find out that the margins in the earnings they're going to be disappointing, right? They're going to find that out. And so, but his goal is that once he gets the cash, hopefully he can pay off his brothers and gradually get those margins, because you need the cash to get a big company and start doing all these projects that you want. And hopefully, as time goes by, the margin will get back to normal. So that's what's likely going on. So again, he did not care about the stock price. Because he can't cash out. If he cashed out, he'd be insider trading. So all this was an elaborate scheme to get extra cash so they can have an advantage in the AI server market. So again, not financial advice, but hopefully this gives you an idea of what's going on, so you're like, oh, that's why it's happening. So you calm down, because I feel like sometimes when you don't know what's happening, you'll get nervous. Like I said, this is conspiracy theory, but to me, this is the only theory that I think makes sense. It explains why those Hindenburg oddities that they noticed occurred, and also it explains why Charles Lang did not, because one of the comments I see about, Charles, why don't you freaking come out and calm down the investor fears? Why don't you come out and just say, "Oh, we're gonna have the 10K done. We're gonna have this thing done. Don't worry about this thing." It's because it's not in his best interest. His best interest is to get the cash and use that to maintain their market share. His interest is not to calm the investors down on the stock market, right? Because he knows that, the stock market the price of the stock doesn't really help him, because if he sold it at a high price, he knew it was going to tank anyways, because the margins were going to be eroded. He knew it was going to tank anyways, and then he would be caught in jail, whatever, for insider trading. So he knew he couldn't sell the stock. So the only thing he could do is get a whole bunch of cash from investors to grow SuperMicro. But unfortunately, that does mean the guys who have to take the brunt of the hit is the investors. Anyways, take care, guys, and hopefully you got something out of this video. Bye.